Hello everybody and welcome to FinTech Futures here at Finnovate Europe in London, UK. My name is Tyler Pathe. I'm a reporter for FinTech Futures, and today I'm very happy to be joined by Daniel Ben-Aron, the Managing Director of KoreFusion. Daniel, how are you?
Well, thank you for that lovely introduction. Nice to meet you as well, Tyler.
Lovely to meet you too. Are you enjoying Finnovate this year? Before we started rolling, you mentioned it was your first Finnovate event. What do you make of it?
Yeah, it's great. We kind of do the conference circuit of Mana 2020 and Singapore and all of these. I've never been to one of these festivals before at Finnovate. It's great. Much more, I think, grassroots focus on fintechs that are actually in the trenches doing the innovation. So wonderful perspective.
Well, it's really fantastic to have you with us today. I think it's quite an interesting environment for a company like KoreFusion to find themselves in, surrounded by all these industry sort of movers and shakers and disruptors, of course. Before we get going, maybe you can just tell us a little bit about what KoreFusion is, where you are, what's your standing in the industry?
Sure. We're a two-headed beast. We are a management consultancy with offices globally, so Singapore, Mumbai, Dubai, New York, San Francisco, and Mexico City. And we're also regulated in the US as an investment bank, as a broker-dealer. So we run that out of San Francisco. So we do a little bit of both, working for clients across the industry, be them kind of large financial service incumbents, all the way through to startups and everything in between.
Fantastic. Well, it definitely sounds like you've got quite a significant scope across the industry. A lot of what we're seeing here at Finnovate this year is looking at really a lot of the latest trends in financial technology. For me personally, I've seen a lot in AI, in tokenization, in trading, a lot to do with like compliance and regulation, as you'd expect from a heavily regulated industry like finance and banking. But for KoreFusion, you've got you described it as sort of like a two-headed business, right? And you've got a footprint in lots of different countries across the world. How do you think that the fintech landscape differs from your US offices to your offices in India, for example?
I'd say there's probably two main differences. One is that the user needs, which ultimately define what the fintechs are doing, how they're creating value in the business models they're pursuing, differ significantly between developing and emerging economies. And so we work a lot kind of in Southeast Asia, India, middle markets as well, and totally different world in terms of what the end user requires as compared to places like London, New York, San Francisco. The other factor that ultimately determines that difference is the ecosystem in which the fintechs themselves are operating. So what the financial ecosystem as driven by the VCs look like, what the regulators have to say, and then kind of the broader mix of partners, whether that's go-to-market channel partners, or it could even be, how the credit bureau system is set up in a particular country. So there's a lot that kind of comes together to define what is possible and what needs to be done for any given fintech.
It's really interesting that you talk about serving these sort of different emerging needs within each market type, if it's sort of developed or mid-market or emerging market, for example. From your standing, are you noticing that there are major differences in what the customer is demanding from the industry between different agents?
Yeah, absolutely. I think of the example of Carvana, the American kind of auto selling platform, which is not strictly speaking of fintech, but given the role of financing in the industry, on the one hand, and Move, which is an African Nigerian startup that does auto loans. So Carvana kind of really speaks to a market like the US where 17 million new cars are bought every year, and provides a platform to sell some of those on a secondary market. Across all of Africa in 2022, I think there was 900,000 cars bought. And so part of the reason for that discrepancy is the inability for Africans to get auto financing. And so cars are really thought of as a luxury item across the continent. And Move has stepped in to try to address that funding gap. I think they've raised over $100 million to date to try to tackle that problem. And kind of, to me, the example between a fintech darling in the US selling secondary products that everybody in the US already has versus the African one that is enabling people to get their first entry into that market really talks to the difference of needs, and the way that those needs are fulfilled kind of gets to some of those ecosystem questions. How you're doing underwriting in Africa obviously looks very different than how you're doing it in the US.
I'm not sure if you saw, but at the very back of the hall, there was this huge map, and they had places where you could sort of pinpoint where you'd come from today. When I saw it, I thought, gosh, how fantastic it is that you have all of these different companies coming together in one room and collaborating all together in sort of towards one cause. When you look at these discrepancies within different markets that you're talking about, how do you think those discrepancies / differences have spurred a new level of innovation? What does that innovation look like?
Great question. I think it depends somewhat. The type of innovation happening, it does take a market level persona. And I think what's really interesting is where you start to see some crossover pollination between emerging economies and developed markets in terms of innovation. So if you look at the role of regulators, for example, in driving innovation, there's probably a little bit of borrowing of best practices globally. So it could be folks in the US looking at what India has done with UPI and the success that they've had in payments, and saying, what can that teach us about how we develop and adopt a real-time payments infrastructure building on top of ACH in the US. Or it could be going the other way, where Europe and the UK especially, leaders in open banking and driving that agenda, and the world kind of country by country are starting to roll out open banking frameworks. So to go back to the example of Move in Nigeria in the last year or so has rolled out their own framework that borrows heavily from the model developed here in Europe. So there is kind of a cross-pollination as regulators drive it. Obviously, though, kind of getting back to the point of what the end user needs, what the way that businesses themselves and the fintechs themselves are innovating to address kind of those different needs does differ, right? So in the US, again, to take as an example of credit, you have a very well-established banking system that serves consumers very well. There's high card penetration, so people have access to unsecured lines of credit. The credit bureau infrastructure is highly efficient. Some middle markets are kind of quickly catching up to that. So if you look at it as an example of Saudi Arabia, very advanced, right? In terms of their open regulatory framework and the ability to start to underwrite credit. Again, tropicalization, the attitudes towards credit in the Muslim world, very, very different from in the Western world. And that kind of informs the way that a Muslim fintech, take Tamara as an example of a BNPL operating in that country, even how they perceive credit risk, because there's strong social pressures for repayment that you see in that part of the world that you don't necessarily see in the West.
Yeah, it's really, really interesting. And I think for me, it's sort of like almost two sides of the same coin in a sense, because we spoke a lot about sort of B2C and serving the different needs of consumers, we talked about the developments in Saudi, for example. I was very, very fortunate to be able to travel to Saudi last year and saw all of the greatest innovations happening there. In terms of the B2B landscape, which is, I think, from what I've seen on the agenda, it's quite evenly divided between B2B and B2C. In regard to B2B, how are we seeing trends in fintech and payments emerging there?
Yeah, interesting phenomenon, I would say, in B2B. Whereas B2C, you see kind of very different end user needs and landscapes. B2B is actually much more similar between emerging and developed markets. I think what you see when you look at kind of credit issuance as an example in Southeast Asia, the World Bank's identified a $2.4 trillion SME credit gap in that part of the world. If you look at the US, in comparison, 40% of US small businesses can't get a loan when they go to their banks. And so you really have actually pretty similar dynamics, or at least much more similar than on the B2C side. When you kind of look at what the world of fintech is doing to start to address or create value in the B2B space, historically, one of the points of entry into the B2B market for fintechs has largely been around payments, because payments volumes and payments flows in B2B are huge, kind of 125 trillion in global B2B payments volume last year relative to about 50 in B2C. And so when companies and fintechs look at those flows, there seemed to be an opportunity. What I think has emerged is that a lot of that flow in B2B has been commoditized. And so to start to create value, it's not sufficient to just be a payments rail, but rather you have to start to create payments around, value rather around the B2B payment. And there's a lot of innovation, really innovation happening across market types in creating value around that B2B payment. And that could be obviously credit issuance and the issuance of terms. Credit card companies are looking at kind of how they can increase commercial card usage, which is kind of a perennial challenge, particularly with issuers that may not be prioritizing commercial cards as much as they do consumer cards.
I see.
There's kind of opportunities to increase efficiency of kind of business process and procurement, and marrying payments into those kind of workflows as well, to bring down kind of manual intervention, reduce errors, and kind of attach information to payments themselves to help reconciliation and things like that. So there's a lot of innovation happening around payments within B2B, but that is the tough one to crack, and I don't think anybody has yet achieved it.
Yeah. Well, not yet, but hopefully with events like these and attendees like you, it will be a challenge that will be overcome sooner rather than later. Daniel Ben-Aron of KoreFusion, it's been fantastic to speak with you this afternoon, and thank you for attending the event. Thank you everybody who's taken the time to watch this video with us, and if you'd like to find out more, please head on over to fintechfutures.com. Thank you.